Welcome to Understanding the Renovation Process and Setting Up an FHA 203K Loan in Relay Conductor. Today's training agenda will be understanding who does what and when. We're going to go over the roles of each individual involved in the process. So we're going to talk about setting up the FHA transmittal summary, setting up the maximum mortgage worksheet, or otherwise known as the MMW, and setting up the fee worksheet and making sure that all of the prepaid finance charges are properly accounted for. Let's first talk about the entire process and who does what and when. It first starts off with the same way any mortgage loan starts off, and that's with the loan officer. The loan officer takes the application like they normally would, and they pre-qualify and run their desired choice for automated underwriting, whether it be LP or DU. The difference, however, is that at this point in time, the loan officer will get involved with another professional known as the renovation specialist. And the renovation specialist works for the renovation team, and they'll work directly with the loan officer to help the customer, their contractor, and the appraiser in all aspects in regards to the renovation work being done. So the renovation specialist at this point in time will go on a conference call with the loan officer to help determine what do they really want to do with their property, as well as help set expectations so that the customer knows everything that they need to do during the process in order for us to close on time. So during this meeting or the conference call with the loan officer, we will also help the loan officer complete the maximum mortgage worksheet and review this with the customer, explaining to them what each of the costs are within the maximum mortgage worksheet so the customer understands where their money's going. We're not going to talk about the fees involved in the loan, just the fees involved in the renovation. At this point, the loan officer will get all the disclosures signed, like they normally would. And then when the loan officer is ready to lock the loan, we're going to ask that they give us at least 45 days from time of application through the closing date. So we need to do probably a 45-day lock if you're going to lock the loan at time of application. Now we ask for 45 days on the lock not because it takes us 2 weeks longer for the process. It's because the customer usually needs about 2 weeks to determine what do they want to do to the house and what renovation work they want to do, as well as getting a contractor involved. The loan officer will transfer the credit and the disclosure forms to the processor, and then the processor gets involved. And this is the same processor that the loan officer would normally use for all of their other loans. There is not any special processor for a renovation loan. The processor processes the credit side of the file just like any other FHA loan, orders the FHA case number, but does not order the appraisal. The renovation specialist receives all of the bids and the HUD consultant report based on what the borrower wants to do and their scope of work. And again, the renovation specialist will work specifically with the customer to help them determine all of this. They will update the maximum mortgage worksheet with the actual bid amounts instead of just estimated bids. They will validate the contractors, as well as revise the FHA connection to make sure that it's set up exactly as a 203K Streamline or 203K standard should be set up, and they will notify the processor that they did update the FHA connection. At this point in time, they will order the appraisal, and then once they receive the appraisal, they will log it in with the FHA connection. The renovation specialist will also, once they receive the appraisal, will go through the entire report and make sure that everything is accurate as far as it being compliant to a subject to completion appraisal. If there are no conditions to the appraisal, we will upload the appraisal and the renovation package to the XDoc system and copy the loan officer and the processor. So at this point in time, the renovation specialist will make sure that the appraisal is done correctly, that the maximum mortgage worksheet is completed correctly, that the fees associated with the renovation are in the fee worksheet as they should be and marked as a prepaid finance charge. And then the package will also contain all of the additional disclosures that need to be signed by the customer or the contractor in regards to a 203K. So the loan officer does not need to worry about any of that, nor does the processor. The renovation specialist takes care of all of that. The processor, while this is going on, completes the processing and transfers to underwriting. Now the underwriter gets involved, and they underwrite the file just like any other 203B. We do not require any special underwriters to do a 203K. They underwrite the appraisal, review the cost estimates, and conditions for appraisal and the renovation work if there are any conditions that need to be conditioned for. They will sign off on the maximum mortgage worksheet and the FHA assurance of completion form. And then they will condition for the credit. The processor will resolve all conditions on the credit side except for the appraisal conditions. The appraisal conditions will be taken care of by the renovation specialist. Once complete, the processor uploads all credit conditions into the XDoc system. And they submit it back to underwriting, and then the underwriter approves the mortgage and clears it to close. So this is the entire process from beginning to end and who's involved within the loan. Very similar to a regular mortgage loan, except the renovation specialist handles everything within the property side of the file to make sure that that's completed accurately. Now let's talk about step 1 in setting up the file as a 203K within the Conductor system. The first part is setting up the transmittal summary. So the first thing you do is you find the form, the FHA transmittal summary. You change the section of the act to 203K. And then you make sure that the sales price is the actual sales price that the customer is buying the home for. The sales price does not need to be inflated for the amount of the renovation work. And then you put in the estimated value for the home as to what you think the value of the home will be after it's fully renovated. In this case here, we're showing $300,000. We mark that loan is a purchase or a no cash out refinance if it happens to be a refinance. A cash out refinance or a streamlined refinance would never be marked on a refinance because we'd never give the customer any money at all. All the money that is in the mortgage loan goes specifically into the property itself. Then we mark 203K under the loan purpose column. At this point, the transmittal summary is set up properly. Now step 2 is setting up the maximum mortgage worksheet, which again we refer to as the MMW. Now there are not very many fields within the maximum mortgage worksheet that correlate back to the 1003. The name and address do. Everything else below this is going to have to actually be typed in. So the first thing you need to do is, of course, is find the form. It's marked under FHA 203K Maximum Mortgage Worksheet on the left-hand spine of Conductor. If this happens to be a HUD REO, mark the HUD REO box. If it's a streamlined 203K, meaning that there's no structural work and that all the renovation work combined is less than $35,000, mark Streamline K. What this means is that we do not need a HUD consultant. And again, as a loan officer, you don't have to worry about this because the renovation specialist will help you all the way through this whole process. We just want you to be aware of what it is. We mark, of course, either purchase or no cash out refi. In section A, property information, we put the actual contract sales price of $200,000. And then the as-is value is the sales price as well. Now, we do not need a separate as-is value from the appraiser or a separate as-is appraisal. We just put in the same thing, same value that the sales price is. If this happens to be a refinance, we enter the existing mortgage debt in the contract sales price and we mark existing debt, and then the as-is value, we can put in an estimate of the as-is value, just a guess on our part, or we could put the amount of the existing debt. And then, of course, we estimate the after improved value of the home after it's fully renovated. Continuing on, we're going to put an estimated amount of the renovation. Here we put $55,000. Now we always have a contingency reserve as well. We're going to put at least 10%. Because with every renovation, it seems like there's always something that pops up, something else that happens, and we want to make sure that there's enough money in the renovation fund to take care of any surprises. So we put 10% here. Now, if the utilities cannot be turned on while the appraisal is being done, or if they cannot be tested prior to closing, we're going to bump that to probably 15% and sometimes even 20% if we think that it is additional risk, or it may cost more to get the utilities turned on than normal. On inspection fees, we need one inspection for each draw that we're going to do. So the maximum amount of draws on a 203K are 5. You can do 5 draws, and each draw is going to cost $150 because the inspector has to go out, inspect the property, and make sure that all of the work that's being billed for has been completed. And the inspector, of course, charges us $150 per draw. So we initially set it up with 5 draws. It's kind of the worst case scenario. If it turns out they only needed 3, well, there's going to be additional money left over in the renovation escrow account. Other benefit of a 203K full or standard where there's a HUD consultant involved is the fact that if the house is uninhabitable during the time of renovation, meaning that they bought a house that they're going to just gut the entire insides, there's no possible way they could live in the house. If this is the case, we can finance up to 6 mortgage payments, 6 months worth of mortgage payments into their renovation escrow account, so that they're not making 2 payments. They have their rent payment and their house payment. This way here, we'll be making the renovation payment out of their renovation escrow account. This is purely optional. It's by no means mandatory, but it sure is a huge benefit to the customer. On a full 203K, we will need a consultant. Now, the HUD consultant is a third-party individual that's not related to the customer nor the mortgage company, that goes out and prepares a HUD consultant report prior to us ordering the appraisal. In the HUD consultant report, it states all of the work that's going to be done, and it states that it is compliant with all FHA or HUD guidelines. The HUD consultant is a third party that helps the customer make sure that their renovation work is done exactly as it needs to be done, in full compliance with HUD and lender guidelines, and they also help the customer manage the contractor. So the HUD consultant does charge a fee for this. The fee schedule is in the renovation portal within Starkey Mortgage, and it shows that however much box B1, which is the estimated amount of renovation, is the HUD consultant fee is based on the renovation amount. So it varies. $1,000 is the highest fee allowed by HUD. So that's why we put $1,000 here. It's the worst case scenario. The renovation specialist will adjust this if it is less. The final appraisal fee is in the other fees under B9. Now, on every renovation that we do, we will have the appraiser go back out and make sure that all of the work that we told the appraiser would be done prior to closing has been done after closing. And the appraiser usually charges about $150 for this. Now on line B11, the supplemental origination fee, this is a lender management fee that auto-calculates within the form. This is what pays for the renovation specialist after closing to help with all of the draws and the closeout of the renovation loan itself. This fee is a minimum of $350 or 1.5% of line B1, which is the estimated amount of renovation. Continuing on, we look at the optional fees that can be financed into the 203K. As we talked about earlier, mortgage payment escrow account can be financed in if the customer chooses. Also are the architectural and engineering fees. We can finance these in as well. We have a fee here of $900, but that's just an estimate at this point in time. This is purely optional with the customer. They do not need to include these fees in the mortgage loan if they don't want to. And the other one is the permit fees. Most of the time, contractors include the permits within their bid, so seldom does the borrower ever finance a separate line item for the permits. As we continue on, we look down in section C of the maximum mortgage worksheet, and this is where it's going to show us how to calculate the maximum mortgage amount. When you look at here, C3, this is the maximum mortgage for a purchase can be 96.5% of this number. This is the acquisition cost, which is the purchase price plus the total renovation amount. Now the maximum mortgage is in C4. Within this program, this has to be manually calculated. Some programs it calculates automatically. Within this program here, we have to manually calculate it. So we take line C3 times 96.5% and enter it here as a manual number. If this happens to be a HUD, real estate owned property, they have the $100 down incentive, where all you have to do is put $100 down. We can do a 203K on these, which is a phenomenal way to buy a property, because we can finance in all of the renovation work, and the customer only needs to bring $100 to closing for their down payment. If that's the case, you put $100 in the open box, and then you calculate the maximum mortgage amount by taking C3, subtracting $100 from it, and putting it into the box C4. Another thing that we want to make sure that you verify is that the upfront mortgage insurance premium is calculated properly here. Sometimes it may not. This is the responsibility of the loan officer or their processor, not the renovation specialist, but we just want to make sure you don't miss this key point. And then we need you to choose one of these options. And it says pay the net interest income directly to me or apply the net interest income directly to the mortgage principal. What this means is that on the borrower's acknowledgement that's going to print with your print group, all of the money that's held in the renovation escrow account, so like in this case here, it's $71,118. That amount of money is going to go into an interest-bearing account for the customer. They're going to earn interest on it. That money we can pay back to the customer. The amount of money they've earned on their money can be paid back to them, or it can reduce their principal balance. What we're asking here is, what does the customer want to do with that money? Then here in remarks, we type final appraisal cost is $150, because in the other section up in the top under B9 we put $150. Here's where we explain what that $150 is. Okay, as we continue on, step 3 is setting up the fee worksheet. Now that we've determined what all the fees are going to be on the maximum mortgage worksheet, we have to transfer these fees into the fee worksheet. And of course, the first thing to do is to find the form. Then the second thing is to enter the loan amount from the maximum mortgage worksheet, line C4. Now, what I suggest you do is print the maximum mortgage worksheet so that you can take all of the fees off of it and transfer them into the fee worksheet, so that you don't have to keep jumping back and forth from form to form within the system. We want to make sure that all of the fees that we're transferring from the maximum mortgage worksheet is marked as a PFC, or prepaid finance charge, because it must get calculated into the APR. The first one to enter is the supplemental origination fee. This does get put into section 1 and does get added as your origination charge. And then we type in supplemental origination fee. This is not an option in the drop-down box. We have to manually type it in. The second section we go to is section 3, required services that we select. Here in this section, we're going to put the 203K appraisal reinspection fee, and that comes from line B9 of the maximum mortgage worksheet. We're going to also put the title update fee, which is also in section B3 of the maximum mortgage worksheet, and then transfer the fees over to their appropriate points. Then we go to section 6, required services that the customer can shop for. And we enter the 203K consultant fee, maximum mortgage worksheet, line B7. We add the inspection fee, as well as the architectural and the engineering fees. Now, I understand that the permits and the architectural engineering fees are optional fees that the borrower can include in the mortgage loan, but if they do choose to include them, they must be listed on the fee worksheet and they must be listed as prepaid finance charges. Now we go down to the bottom of the fee worksheet to the details of transaction at the bottom of the page, and we have to do a workaround. Because what happens is this closing cost adjustment right here should be 0, but it's showing a negative $1,051. What happens with this is these are all credits right here. So when you put in a credit of a credit, it actually adds $1,051 to the cash from borrower. So to correct this, we click on the CC adjustment for FHA. This box opens up. 203K rehabilitation cost automatically populates with the $1,015 or whatever it happens to be. We just need to go to the box below it and put that number in as a negative and then close the box. So once this is done, you can see the CC adjustment for FHA is gone, and cash from borrower is now over $1,000 less cash to close because it's no longer calculating that in incorrectly. Now let's look at the other things that we need to do in this section. From the maximum mortgage worksheet, we need to add lines C1, C2, and C4 and enter that here in alterations. That's the renovation amount, the contingency reserve, and the escrowed mortgage. We put that into the alteration section here. Now when we go back to the borrower information screen, there's a couple things that just doesn't look normal. And the first one is when you look at the LTV or CLTV. Here it's showing 130.814% or 134% LTV. You know, you think that that's crazy, but really, in this type of a loan, this is normal. As well as when you look down at the down payment, it shows a negative 30.814% as a negative down payment or a negative down payment of $61,000. Don't change these. This is the way that it should look, and you're set up properly now for disclosure. So step 4 is to print the disclosures like any other FHA loan. Now here's a word of warning, and I'm going to read this for you. It says, if you disclose knowing the customer intended to do a renovation loan and you did not include GFE blocks 1, 3, and 6 fees as presented in this presentation, you cannot add them with a change of circumstance later. So keep that in mind. If you know it's going to be a renovation loan, properly set up the maximum mortgage worksheet and the fee worksheet as a renovation loan, because you cannot go back later and do a change of circumstance. Well, this concludes our training on setting up a 203K within Conductor. And if you have any questions, you can send those to renovation@starkeymtg.com. I hope you're having a great day, and I hope you have a ton of success with this program. Thank you very much, and I'll talk to you soon. Bye.